The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 4th, 2013, fantastic Friday edition of today's Opening Bell on The Trader's Edge. Thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that each of us need to lead an inspired life. So let's go check out one of these tools. This is really my favorite tool, I think, of all time. This tool is called The Secret to Being Happy. Now you understand why it's my favorite tool out there. Now, had a great question was asked of me by my daughter yesterday. And questions, folks, and the question was this. It was, Dad, in essence, how is it that you're always so happy? How do you stay so positive? Great question, and she asked me that because she was having a little surgery. Well, not a little surgery. She was having some surgery done yesterday, and so it was a great question. I figured I would go ahead and review that with you here today because the reality is, the question is, so there's the question, and what happens is that. Here, I'm going to ask you to write down 4 words. There's 4 words that you need to write down because this is the secret to being happy. And happiness is just about being happy with who you've become. It's nothing more. It's nothing less than that. It's a very simple thing. But there are these 4 words that you need to write down. Those words are potential. That's number 1. Action, number 2. Result, number 3. And belief, number 4. That is the entire set of words that you need that are the fuel for being able to be happy. You see, it's always about seeing things the way they are, right? Wrong. It's always about seeing things better than the way that they are out there. That is really where you start. And it's always about understanding your potential. And the reality is that you have more potential than you absolutely believe. In fact, when you think you know how much potential you have, you can always go farther out there. I'm not going to teach you how to do it here just right this second here, but I may even just do a workshop on it, a full hour and a half workshop there, because the reality is it's all about focus. What Tom talks about, what you focus on grows. Well, that's true. The question is, what is the energy behind focus? Well, focus starts with a question. You see, each of us out here have a primary question that controls our entire life. For me, guess what my question is? It's pretty easy. It's how can I make things better? How can I make things better for you? How can I make things better for myself, for my family, for my coworkers, for friends? It's always about how can I make things better. Now, the majority of people out there, and which is not you, but I want you to be able to help your friends out there. The majority of folks, their primary question is, why am I not good enough? Or what's wrong with me? Or why am I not loved? Those really all fit in the same thing. What's wrong with me? Can you imagine if that's your primary question, where's your focus going to go? Do you think you're going to focus on your potential? Absolutely not. So if you want to be able to shift that, you need to always see things better than they are. Take a look at the fiscal cliff stuff. Okay, words are very important out there. So I talk about the fiscal cliff. What if we and we're going to be, or the media is going to be talking about it, right, for the next who knows for how long? Well, why don't we, you and I as citizens, why don't we change the words from fiscal cliff to what it is that they've got to work on here over the next 2 days out, or next 2 weeks out here? Why don't we just change that to the Affordable Spending Act Because isn't that really what it's about? It's what is it that you can afford to spend? Now imagine if the media were just simply talking about the Affordable Spending Act versus the fiscal cliff out there. Words are important, so words will trigger things, and that's why you don't want to be saying what's wrong with me. You want to always understand your potential. That is where it starts, folks. And so if you're not happy with your physical self, maybe that's your weight, maybe that's your strength, maybe that's your health, and today's all about health. We got Nico DeHaan on here. You want to understand, what does your potential look like? Not how you look right now, not how you feel right now, but what is your potential? And you want to see that better than it is, and then you want to be able to take action out there. When you take action, you're going to get a result. May not be the result you want initially, but you will get a result. You will eventually, as you take action, I like to call it massive action, you'll eventually get a better result. That then creates a stronger belief, which helps you to fuel more potential, more action, more result, more belief. That is the circle that you want to be able to get in. Maybe you're not happy with your finances, could be your career, your job, your trading and investing. Focus on your potential out there. We've got 9 hours a day of programming here with all kinds of hosts that can share with you secrets out there, ways to be able to trade or invest better. As I said, we got Nico on here. He can help you with your physical body as well. All you've got to do is understand, write down, what does your potential look like out there? If you're not happy with your relationships, maybe it's your boss, your coworkers, your friends, your family, your other half, whatever it might be. Really what you need to understand is, what is that potential with that relationship out there? And then it's action, result, and belief. I know I can do an entire workshop just on this, and it's all about being able to change your primary question, folks. The truth is, you have way more potential than you give yourself credit for, even if you give yourself a lot of credit for the potential that you do have. Let's go take a look at the potential in the markets here. We had the jobs report out at 8:30. The jobs increase about 155,000, lower than expected. You had unemployment out at 7.8%. But what we want to take a look at is, how has the market reacted? Not a big reaction. In fact, if you take a look we're looking at the 30-minute chart here on my screen. We'll start off with this, then we'll go down and take a look at gold and the currencies, because that's really where we're seeing the most volatility. When I say gold's trading up $27 right now, down 16 at 16.47. The euro's falling apart, and we'll go take a look at where that is going to. If you were watching yesterday's show, I gave you some and what I wanted you to do, what I do want you to do for this new year. The resolution that I want you to be able to make to yourself is, each day I want you to learn something new. Yesterday, and if you didn't catch yesterday's show, I certainly gave you a couple new things out there, some divergence correlations that you can use. And so if you didn't see that show, go watch the archive on Channel 9 on this show out there. And because those are a couple things that you could put down on your checklist of things that you didn't know, but they exist out here. I'm not going to go ahead and cover those. Go check out the archive. If we take a look at the ES Mini right now, just really a small pop. The price spread here during the jobs report numbers was a low of 14.51 all the way up to a high of 14.57. So you have about a 6-point move out there. No great big shakes. You do have the ES Mini on the 30-minute chart moving up into that upper relative strength area. What we can see here is the ES Mini has been really traveling in a sideways consolidation zone. The key candle here to be paying attention to is going to be that 4 p.m. candle on the ES Mini on the futures. Why? Well, we're going to go take a look at the euro, because the same pattern that I was teaching you about on the euro applies here. It doesn't matter what the chart is, but the same pattern that I was teaching you yesterday applies. Right now, ever since the 4 o'clock close coming in on the second here, as we came back to the market opens, you can see that trading, I'll go ahead and draw the line across the screen here. You can see that trading has been contained within inside the body of this candle. That is truly the essence of price out here. And whichever way this breaks, that'll be a significant sign of where that next move is going to come to. So as we take a look at this, I've got black line. Oh, that's cool. We'll leave a black line and red line. We'll use the red line out there as our support. And you can see what I'm doing. I'm drawing it from the body. In this case here, I'm ignoring the small little shadows or wicks that we have out there at the highs. And you want to do this at the body. So now I'm going to go ahead. We're going to switch over to the euro. For those of you that didn't catch yesterday's show, you go back and watch the archive of that. I think that was the 10 o'clock show on the Money Masters when I was sharing with you that technique out here. So let's go take a look at the euro. Let's go see what the euro is doing. Then we'll switch over to gold or silver. And you can always give us a call at 877-927-6648. Here's my currency button. Okay. So now we're taking a look at the euro. What we can see here in the euro, moving down, making a 70% retracement on its way to the 0.786 level. The euro had gotten into the overbought condition, did that on December 19th, gave you a little gravestone doji candle out there. That's a very bearish sign. Didn't really get much follow through on the session on December 20th. But still, that ended up, if you combine those two sessions, ends up being a shooting star out there. If we take a look at let's just take a look at yesterday's candle, moving down with a wide-ranging bar on the way down. You're having a little bit of a bounce this morning. Now we're going to go down into the short-term chart. And by short-term, I mean we're going to go take a look at the 30-minute time frame. So as we go take a look at the 30-minute time frame, these two black lines out here, this is where we left off yesterday. We were taking a look at this bar, and why? Because we were doing it for the prior bars out here, that one being as the market had moved into the oversold condition, which was at 2,200 hours. That was at 10 o'clock in the evening on January 2nd out there. We use that same technique. It's a continuation pattern. It's a version of what's referred to as the falling three or the rising three, in this case here, falling three pattern out there. If you're looking for places where to add to a position, say you're already in a position, it's working in your favor, that's when you want to be able to add to a position. You want to be able to find continuation patterns that are out there. Well, this is a great continuation pattern. This is a little Stevieism that I've added to the Japanese candlestick version because it works so well out there. And as we left yesterday, when I say left yesterday, coming into the 11 o'clock session, at the 11 o'clock session, you had the lower edge of that boundary line being tested here, didn't hold, went ahead and bounced up, and you can see right at the time frame of 2:30 when you got a close below it, and you really got a close below it here, below that area, inside the body of the candle. That's all that those candles were doing as they were moving sideways out there. You got that continuation on the to a move down. Now move down into kind of the extreme oversold level. You can see here what it has done. Just simply worked its way sideways, made a lower low, made a higher relative strength in as far as the signal out there. And now what we're seeing here is a bounce in the euro. The bounce in the euro is going to take it most likely up towards, this is the 30-minute chart, we'll take it up towards the overbought territory area. What do I expect here? I expect what we will see is we'll see the markets continue to pop here for a while. We'll have to wait for a signal out here. The euro still wants lower price out here. But as it has moved down into these areas on the 30-minute chart here, as it has moved down into oversold territory, it has to work its way up. Can either do that by moving to the right, meaning consolidating sideways, or it just simply can exercise, do a little bit of maybe some calisthenics. Maybe it's going to do some push-ups. It's going to push up until it gets into the upper range of that overbought territory. At that point in time, the euro will be ready to resume its way down south. When we get back, we'll go take a look at gold, 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go out to Ken in Altamont Springs. Ken, thanks for calling. Thanks for holding. Happy New Year to you.
Hi, how you doing today?
Good. How's the first week of your new year?
It's going pretty good. I actually had a couple of successful trades yesterday. So
that is great. That is great. Good to hear. Congratulations. You wanted to take a look at United Healthcare?
Yeah, it broke yesterday. It broke down.
Yes.
I had a short-term short position in there. I made 100% profit on a put option.
Okay.
And I wanted to ask you, how far down do you think that thing is going to go?
Okay. So what we're going to take a look at is United Healthcare, folks. The ticker symbol on that is UNH. And the first place that I'm going to start, Ken, is with the monthly chart out here on United Healthcare. I don't know why that thing went away. The first area that this thing is going to run into that is a possible support level on the monthly chart is going to be the candle from May 31st, 2006. That had 346 million shares out there. And I'm going to draw the line across the screen out here, put that in black. And as you take a look at it, you can see that area on the last time down, the last trip down, which was the month of August 31st, that area held. Came back down to that area November 30th and sort of rejected that area. And that price point that we're looking at is the high there, which is $50.22. It's at $51.99. It's trading up just a bit here in the pre-market. But that's really where you're going to get your next piece of information. What you want to see is if you're still in the trade, you want to see this thing close inside that bar, anywhere underneath $50.22. That's what the monthly chart is telling us. If we go take a look at the weekly chart, on the weekly chart, that's strange. Nothing, actually. I did some work on this during the break, and nothing held here. On the weekly chart, that says that it's going to be coming into the candle here of August 3rd. That's what it's trading into. That is the swing point candle. The low there is 50.32. I wasn't actually writing the numbers down. I think the other was, 50.22 or something like that? Or
Right, 50.22.
Okay, so now you got 50.22 to 50.32 as a area where you're going to be able to get some information from you. As far as the weekly chart, there were 35 million shares down there. Came down and tested that area on 30 million shares the week ended November 16th, so not enough to bust it down. And then this week here so far, 24 million shares. So if we take a look at the daily chart, I don't know if this trades 8 million shares a day. Let's take a look at yesterday. So yesterday's a high volume day. Oh, yes, okay. If you're getting a high volume day today, you'll have enough information on the weekly chart. Yesterday was 14 million shares. So 14 million shares is coming into the swing point of November 15th specifically. That has 6 million shares, and that low is 51.09. So it's at 51.09 to 50.32 or something like that. That is really going to give you the piece of information. It's not in the oversold condition here just yet. I suspect, though, if you get another down thrusting day in this, it'll start to reach that level. And you can see each time that it gets down to that point, right around the 30% level in the relative strength indicator, it has given you some kind of market bounce out there. So that's what I would be paying attention to.
Okay.
Does that help?
Yep, that sure does.
Okay, great. And congratulations on your trades, and may you have many, many more the rest of this year and
all right.
Beyond.
Enjoy the
Okay.
morning.
All righty. Take care, my friend.
All right.
Let's go take a look at. I said gold. Let's take and so I do what I say, right? So let's go take a look at the gold contract here. Gold contract this morning making a let me refresh my screen here. It's trading off of its session lows for sure. If we take a look at gold on the daily chart, moving all the way down to a low so far today at 1626. That's 1626, and you've got good volume already today. 159,000 contracts. So you got volume picking up on the way down. Testing the swing point, the most recent swing point is December 21st out there, 189,000 contracts. That low is 1630, So that area has already been tested on more volume. Even if this area holds, it says that gold will be back down there to test that level out. Where it looks like gold really wants to trade to is a lower price. That lower price would be the 0.786 retracement off of the lows. Now, what I'm referring to is the May 16th low when gold had traded down to 1526 all the way up to the high that was put in here on October the 5th. The 0.786 area right around the 1584 level, of 1 to 1.272 A to B equals CD, right around 1598. Let's go take a look at a shorter-term chart on gold, see what we've had. Gold, as I recall, where's gold contract? Okay, I'll just have to change the existing chart out here. Let me put this on a 30-minute chart here. I don't think I'll get a chance to get to it before we go to break. But what you can see on this, gold getting into that extremely oversold territory as it was making those lows here this morning, and so it had to work that condition off. It's done it, and you've had a couple of nice spikes here with volume to the upside. However, I suspect gold wants lower price. Why? Because King Dollar, that is on the rise. We come back, we'll see how these markets are going to open, then we'll go take a look at the Japanese yen. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 9 points right now. S&P flat, up a quarter. Composite down $2.50. Small caps up $2. Microsoft down 6 ticks. Intel off 11. Google up $5. Cisco down 3 pennies. Apple trading down $4.81 out at $5.37. Popping to the upside. Google is leading the charge. Then you've got Syngenta Biopharmaceutical. I'm sure that I absolutely mispronounced that. GEVA is the ticker symbol. Up 7% here, up $3 and change. Eli Lilly up $1.52. Under Armour up $1.34. Rig Transocean is up $1.07. Mosaic is up $1.23. Eastman Chemical up $1.06. Tiffany's up 72 cents. To the downside, you've got Apple leading the charge off about $5 right now. Alta Salon ULTA off $4. That's 4%. Lululemon off about $3.50. That's about 5%. Coinstar CSTR off $2.75. IBM down $2 and change. Baidu off $1.48. You got Barrett Bill Corp. Don't know what that is, but they're down $1 and change. Let's go take a look at the U.S. dollar index here, because we've seen some pretty nice swings here in the currency markets. Now, the U.S. dollar index, important for you to understand, That is a basket of currencies. The currencies, the euro being the heaviest weighted structure with inside the U.S. dollar index. That's 57.6% of the entire index. The yen represents 13.6, the pound 11.9, Canadian dollar 9.1, Swedish krona 4.2, and the Swiss franc 3.6% of the index. So our focus is usually on the top 2 or 3, the pound, the yen, and the euro. If we do take a look at the U.S. dollar index, we start here. What you're going to see is that the U.S. dollar index this morning, and this is what it's done here, it's come and it's run into an area of prior overhead resistance. That was formed on the candle. We're looking at the daily chart. That is the November 21st candle. The low of that session, 80.94. On November 23rd, we came back to work. You had the U.S. dollar index gap down. The reason why it's a resistance area, folks, is because it's been tested previously. Other than today, it was tested here on December the 7th. The U.S. dollar index gets up to 80.97, closes back at the 80.40 level. So it was tested. Volume on that candle was 25,000 contracts going into 15,000 contracts. Said that it would go ahead and revisit it sometime soon. Well, today is the day. Volume-wise, 24,000 contracts. But you can see it has tested that area, and it has rejected it at the moment. Why? Well, it was coming into an area where you had a 1.272 expansion of a set of swing points. That was, it also made a 100% move of a move. So we'll see if it can bust through this area here. Now, what the U.S. dollar index is also doing, as you can see, as it's up into this area, last time that it was up here, meaning on December 7th, you can see that it was not near the overbought area. It was, in fact, at the midpoint, at about the 50% level, and then it went ahead and it backed off. Something to think about. That's different. This morning, as it is moving up here, it is getting up towards the top of that range, meaning the 70% area, meaning the overbought area. And you can see here, anytime the U.S. dollar index gets up here, meaning go back and take a look at November 16th. November 16th is where the U.S. dollar index actually backed off. Got to make it pause just for a few moments out there. If I come back and take a look at each time the U.S. dollar index up towards the top of that range, it was up there on July 24th out there. Market goes ahead and backs off. It was up there in July 12th. Didn't even make it all the way up there, and the market goes ahead and backs off. Gets into the extreme overbought territory on June the 1st out there. What does the market do? Goes ahead and backs off. You can also see it's a 0.786 retracement, so you've got a couple of different areas coming together. That's coming off of that November 16th swing point. That is what stopped the U.S. dollar index in its tracks this morning. Now, of course, what it's really doing, it's really tracking what's going on inside the Japanese yen and the euro. So we already covered the euro earlier on. Now let's go take a look at the Japanese yen and see what's going on out here. The Japanese yen in overnight trading. Now I've got the weekly chart up on the screen. Let's go ahead and get rid of a couple of these things here. See if I can do that. Let's get rid of the A to B equals CD, which it did do. It completed on the weekly chart. It completed a 1 to 1.272 A to B equals CD. If you can, well, here, I know a way that you can see that. I'll get rid of that. There we go. So here now you can see that this is the weekly chart that we're looking at on the Japanese yen. You can also see truly in the extreme overbought area. If you take a look at the RSI reading on this, you're up at 80, a little over 80 on a weekly chart. If I pull this thing back here, you don't see the yen up here too often. In fact, the last time was got up to about 79.02 on the RSI reading, and the price was, that was December of 2005. Takes a lot of energy to get up there. And each time it got up there, folks, it went ahead and it began to back off. Now, you haven't seen any kind of, on the weekly chart here, you certainly haven't seen a bearish candle. I don't suspect that we will see that today, but I want to put things in perspective. Now, the other side of the perspective that I want to give to you, I'm going to go ahead and get rid of some of these lines out here, make it a little bit easier for you to look at. So we'll get rid of the A to B equals CD. I'm going to turn on this very powerful tool. Makes it real easy for me to be able to measure expansions and contractions of swing points out here. So on the weekly chart, as the yen has gotten up, now the high so far, intraday today, it's gotten up to 88.40. So it has completed really all of the patterns out here. Now, if we take a look at this tool, it may be difficult for you to see this on the screen. It's not for the folks that are inside the Tiger's Den. If you haven't had a chance to try the Tiger's Den, you should do that. You'll be able to see all these charts here in high definition. Now, if we take a look at expansion of swing points here on the weekly basis, we'd be looking at March the 16th, 2012. That high, 84.17, all the way down to the low, little hammer candle on the weekly chart that was put in on September the 14th, 2012. If you measure that level, and that low is 77.12, subtract those two numbers, multiply times 1.618, add it to the 77.12. That's what will take you up into that range of 88.40. Now, what you can see is that's a 1.618 expansion of swing points. You've got a 1.272 expansion of swing points out here. That's from the swing point of April 8th, 2011. That high is $85.51. That goes from that high all the way down to the low of November 4th, that low being $76.55. You go ahead and subtract the difference there, multiply that times 1.272, add that to the 75.55. That's how you get up there. Most of you have, and if you don't have a charting tool that allows you to put the Fibonacci expansion and contraction, I guess the first thing you got to say is, why not? But if you don't, you can still do the math. It's very easy math to do, and that way it will give you the range. Do not be paying attention to the exact number. You're looking for a range out there. You got to give it a little bit of freedom to roam a bit. Now we can also see is you got a 0.382 retracement as well coming together. So we've got two expansions, two Fibonacci expansions coming off of significant swing points on the weekly chart. Also, if we go back to 2008, the high there is the 110 level. And what the market has done is from that high all the way down to the lows in November of 2011. It has now made a 0.382 retracement. You'll also see a 0.618 retracement off of a set of swing points out here from August of 2009. I guess my point is this. The yen, as weak as it has gotten, and we've got to take a look at U.S. dollar, Japanese, the U.S. dollar yen currency pair. So as prices moving up, the yen is actually getting weaker. And on the weekly chart, it has now hit the levels where it should find some significant resistance. Does it have to stop here? Absolutely not. But in fact, if it does stop here, you'll know the reasons why. You'll also know that it's in that extreme overbought territory, and it may even be setting up quite a nice trade to the other side. Now let's go take a look at the daily. Let's see what's happened on the daily chart out here as we take a look at the euro. I'm going to get rid of the 1.272 butterfly. That is the blue set of wings that you're taking a look at. Well, I guess get rid of everything out there. So we already know it's made a 1 to 1.618 expansion. However, today you have not gotten a reversal candle. So until you get a reversal candle, quite frankly, a reversal candle and some confirmation to follow, it says that the move, is not over. Now, this thing here has been so weak, or as you take a look at it on this chart here, has been so strong on the way up. This is a better trade when you do get a reversal signal to actually be trading the currency pair, quite frankly, versus the ETF structure. Why? Because the money management is in place. Because it would take a trade, you would have your stops in place. You might be using 30, 40, 50 pips, something like that. And you wouldn't carry the trade. Like I wouldn't enter the trade today over the weekend. There's just no way. You don't need to do that. I'd rather pay a higher price. That's called insurance. And in this trade here, take it on Sunday evening when the yen starts to trade out there. However, if it does start trading in the direction which I suspect is going to be a retracement, trading the currency pair is the way that you want to do it, or using the Nadex platform out here. And I believe at 3 o'clock in the morning is when the Nadex platform comes on, so you can always go test drive that. Tom and I will be up with Daryl Martin for the 10 o'clock show, taking a look at the Nadex platform. So maybe we'll take a look at a possible trade setup on the Japanese yen out there. So that is if we take a look, that's a daily chart, no reversal signal yet, but it is up against an area of very, very strong resistance out there. Let's go take a look at, what do we want to take a look at here? Let's go take a look at light sweet crude. Give me a second here to pop that up, and then we'll go take a look at silver as well. So if we take a look at light sweet crude here, you can see on the intraday, this is the 10-minute chart here, the 10-minute chart, crude moving down into the 5:40 a.m. Time frame here, getting into an area of being oversold. Has to work that off. These are great indicators out here. Now what it's done is it's gotten into the overbought territory. However, as it's doing that, it's had some pretty decent volume. Again, just looking at a 10-minute chart at the 9:10 time frame, 9:20 time frame, and the volume as it's moving down here just during this session from 9:45 to 9:50, it's got 1,700 contracts really going against 4,100 contracts, going against 5,000 contracts out there. It's not giving yet on the intraday chart, the best of reversal signals. If we do take a look at the daily chart out here, the daily chart, if you get a close, you can see what light sweet crude. Now, light sweet crude has made an A to B equals CD pattern. If we take a look at that, you'd start with your swing point low on November the 7th. That was the price point of 84.05. Your swing point high is that little shooting star style candle on December the 3rd. That high out there is $90.33. Pulls back down in this little doji candle on December the 11th. You can see making a 1 to 1.272 A to B equals CD. And what you also notice here on light sweet crude, you can see using the relative strength indicator, has gotten up towards the top of its range. Every time light sweet crude gets up towards the top of its range, what does it do? Something to think about, Steve. Take a look at right up here. Last time it was up there was September 14th. You can see getting up towards the top. Of course, you got this little bearish engulfing candle on the 17th out there. If you get light sweet crude to close, if you get it to close somewhere around the $91.78, then it could be 92.15, something like that. That will give you an evening star candle formation out there. Otherwise, at this stage, not getting the clear signal that light sweet crude is getting to reverse here just yet. Now let's go take a look at silver, see what silver was doing here this morning. Silver, what I was showing you on silver yesterday was also the fact if you're just joining in, what you should do is go take a listen to actually yesterday's 10 o'clock show. Really both of them, two shows there that were that are archived on TigerTV. If you're listening right now on the radio, your mobile device, always you can catch the archives of the 9 o'clock hour on Channel 9, the 10 o'clock hour on Channel 10. Silver here breaking through the body of this candle that we were taking a look at. So it is giving you the signal of a continuation move to the downside. The open of that candle is 31.04, trading right now at $29. You can see push down here real quickly early this morning. We'll go take a look at the intraday chart. What you will see is silver also getting into that over sold territory, has to work that self off here. Silver wants lower price. If we take a look at A to B equals CD down patterns, you will start. And the dollar does want higher price. Whether it's going to be today or not is another thing, because we know that it's up against some resistance areas, just as we were taking a look at the currencies as well. What silver wants to do is make a 1 to 1.272 A to B equals CD down. That's going to be in the $28 and change level. And if we take a look at off of the swing point low, and here we would go down into the level of June 29th. That's at $26.25, all the way up to the high put in on October the 2nd. You can see that, still fighting with that 0.618 level and still fighting with that 1-to-1 level. But silver eventually wants to make a 0.786 Gartley buy pattern. That's going to be, and that's also making a 1 to 1.272 A to B equals CD down. Just has to work off that oversold condition. If we go take a look at the intraday chart on this, the 10-minute chart, let me refresh my screen, make sure that we've got active data, and then we'll go ahead and put the relative strength indicator up as well. If I take a look at things here moving in the market while I just simply wait for that, you got Apple down $6, so we'll go take a look at Apple as well in just a moment. So let's go take a look at the relative strength indicator out here. You can see this morning as it moves down into the 5:50, 6 o'clock time frame, you've got silver getting down into the oversold condition, has to work its way off, and that's exactly what it's done on the intraday. You can see all it has done now, it's made that bounce up, and it's made that bounce up into the overbought territory. We'll start watching for some bearish candles out here. This may be setting up a nice trade here for us to use on the Nadex platform, which will be up in about 14 or 15 minutes. Dow's up 11 points, S&P's up 3. Composite is flat. Google's up $7, taking care of Apple's being down $6 right now. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 13 points right now. S&P's up 3. Composite down about $1 and change. And the small caps having another strong day out here. They're the leader in the clubhouse, up about 0.4%, up $3.20 over across the pond. In Germany, the DAX is up 12 points, so no great shakes there. The FTSE's up strong, another 0.5%, up 31 points. Nikkei coming back online last night, catching up to the rest of the markets, up almost 3%, up to $292 last night. The Shanghai up $8, and the Hang Seng was down $67. We're going to take a look at Apple here. If we take a look at Apple, it's trading out at $535.61. struggling out here. Apple today is looks like it is testing the this candle here, this big bullish engulfing. It was actually more than that. This December 31st candle out here. So the high of that candle, there's volume of 23 million shares. The high of that candle is 535.40. It's trading at 535.50 right now. It has already traded down to the low of 535.20. You get a rejection of this area here. That would be a bullish sign. If you get a close inside 535.40, that may set up a run to the low of that area, and that will be giving you a big piece of information. Yesterday's volume to the downside, only 12 million shares after making a higher high on January 2nd here with 20 million shares. So as it was coming back yesterday, coming into 23 million, about 50% of the volume, that's certainly not enough to bust it down. Still doesn't look like a great stock out here, at least yet. And so far today, 2 million shares in only 25 minutes of trading. Don't suspect that we'll see volume continue at that pace. Let's go take a look at the 5-minute chart out here. Give me a moment here to refresh my screen. We're also going to go take a look at, I believe it was Alta Salon. Yeah, Alta Salon, which is trading down about 4% here this morning. So if we do take a look at Apple, what you can see on the 10-minute chart here, you can see it's really moving down into this extremely oversold territory. It means it really just needs to move sideways or retrace its way up. You can see here, as I come back to the left-hand side of the chart, every time Apple gets down into this area, it eventually bounces or works its way off sideways. The first time we're going to take a look at is between December 27th, right around the 12:30 time frame, and it worked its way off and then decided to move higher at around 2:20 in the afternoon on December the 20th out there. So it worked its way off and then, ba-boom, worked its way into the overbought condition, had to work its way down. So this is just a great EKG on an intraday basis if you want to know what a stock is doing out there. It's more than just taking a look at the daily, and it's more than taking a look at the weekly. You should really look at all different time frames out there. Now let's go take a look at Alta Salon, because this is a stock that may be giving a signal of a reversal. It's had a couple of real nice signs of strength, but now it's created this little island reversal formation here up at its high. So if you pull Alta Salon, the highs in Alta Salon happened to be the last time that it had some, well, not the last time, but the 2 times ago, which was September 7th. It had some nice volume as it moved to the upside, gets up to 103.52 with 3 million shares up there, but then it decides to sell off. Now what it has done here, it has given you an island reversal. The last 2 trading sessions, which were the gap up on January 2nd, it just moved a little bit sideways to slightly higher on November 3rd. You've now got a little open window here to the downside as well. The problem is that this is really not a great short, because all this would do, you've got good support right at about the top of the breakout most recently, which was November 29th, which is $94.38. But we'll want to watch Alta Salon because it has given you a bearish signal here this morning. Folks, stay tuned. Daryl Martin and I will be up next. And if you're off to start your Friday, have an incredible weekend out there. What I want you to focus on is what? Understand your potential, see it better than the way it is, and then see it even better than that. Take some action, massive action. You'll get a result. And I think you'll get a great result. That'll increase your belief. That'll force you to even see more potential in yourself. Have a great weekend, folks. See you on Monday.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.